have you seen the news? The real estate market is crashing. It's going down quick and it doesn't look good. Absolutely. Have you seen all the stuff out there? We are screwed. The market is crashing. It's falling. Get your zombie gear. Get your canned goods. Let's go bunker down because this is going to get bad. We're fucked. All right, everybody, let's take a deep breath and relax. I literally just made an outline for a video about this topic. People are freaking out about the market. Let's take a step back and look at a realistic, unbiased perspective of the real estate market. All right, so let's get a realistic perspective on the real estate market. If you were to scroll through your TV channels, if people still do that, and if you were to go on social media, you would indeed think that the market is getting ready to see a collapse never seen in the history of the United States of America. Let me explain why, and then let's get on to some realistic perspectives. Let's look at some simple data and figure out what the market's doing and what it's gonna do. So what I'm doing in this video, and what I do in all my videos, is I try to give you a realistic perspective from somebody who does it every single day. I have a $40 million rental portfolio that I bought without using any of my own money. I also own a local flipping company that's going to flip over 300 houses this year, mostly wholesale, with some fix and flips blended in there as well. So I do this for a living all day, every day, and I am trying to give you information that is actually real. I'm not trying to make money off of your clicks or your views. CNN, Fox News, those channels literally make money from views. And if selling negativity gives them more views, they're going to sell negativity. Sex used to sell. I think it's moving to negativity sells even more. And there's YouTubers that you will see everywhere. Scroll through their feed, you know who they are. Their pictures are probably popping up now, and they get paid from clicks as well. Advertisers pay for how long you watch their videos and how many people watch their videos. So they get paid for that. So they are literally telling you things. CNN, YouTubers, Fox News, all these people are telling you things to get paid. Whether what they're saying is true or not, they don't care about that, honestly. They care more about getting paid. The dollar is more important to them than the truth. I don't make very much money on my social media because I don't have that many views. So just take that into consideration. The reason why I'm telling you is not to get paid. I'm trying to tell you what I actually think and what's probably gonna happen. As I stated earlier, I'm gonna give you some realistic, simple stats and perspective. I'm gonna give you 3 charts that are not manipulated at all. You can go find the exact same charts. I'm picking 3 simple data points that will talk about why the market's where it's at and where the market's going, so we can make decisions together if it's a good idea to invest or wait. So everybody's worried about a crash. So let's define what a crash is. So there's 2 main factors. The first one is numerically based. The second one is just, it is what it is. The first is a 10% drop in house values over a 12-month period. It's a 10% value drop, not price drop. I'll talk about that on the second point. The second point is a crash happens when the value of real estate is higher than the price that people are willing to pay. Now I kind of fumbled through that, but the big difference is just because the price drop doesn't mean it's a crash. I can price my house at $10 million. I can drop it $7 million in price and sell it at $3 million. That's more than my house is even worth. But just because I had that huge price drop does not mean the market is crashing. If you see people dropping the price of their house when they're trying to sell it, that doesn't mean it's crashing. It means they're getting it to the actual value of their house. So some price drops here or there, or if it takes a month or 2 to sell a house because they're overpriced, does not mean a crash. It's all about the actual value or sales price of houses. So don't look at list prices and you see dips. That doesn't mean a crash just because people are trying to ask too much. Now let's get into some actual data and talk about why it crashed in 08 and why it's not going to crash now. So the first chart that I want to look at is the housing supply chart. Now this is taken from the St. Louis Fed. This is national government data. As you can see by this chart, the housing supply has gone up and down a lot in the past 60 years. But look at where we're at now. It's literally in the middle. Right now there's 7.7 months of supply on the market. So we're right in the middle of historical averages. It's been way higher and it's been way less. As you can see by the chart, the higher the supply of housing, the worse the housing market is. So you can see in 2008, it was super high, the supply was super high, and the market was crashing. So as you can see right now, we're at 7.5 months about of supply. So we're right where we need to be. This chart does not say anything about a crash. You can see the old crashes in the past, but we're not anywhere near a crash point right now. Whether you agree with what I'm gonna say or not, if you appreciate some perspective without bias, hit hit that like button. All right, on to the next chart. This is the interest rate chart. This one and the next chart I'm getting ready to show you are the super important ones. So let's dig in here quickly. So this one is super eye-opening to me. I went back to the 1970s on this chart, and you can see that interest rates are still historically extremely low. I'm not going to go decade by decade like I have here on my notes. In the 80s, I think the low point is 9% and the high point is 18%. So the interest rate literally doubled or halved, however you look at it, in one decade. And things have gotten a lot less crazy in the past 20 years. But as you can see, interest rates are historically still extremely low. Even if they go up 1, 2, or 3 more percent, we're still going to beat historic averages or historic lows. And guess what? In the 70s, the 80s, the 90s, the 2000s, the 2010s, people still made a lot of money in real estate despite the interest rates. Good interest rates are kind of wind at your back. Higher interest rates don't necessarily mean you can't make money. They're just another obstacle or hurdle you have to overcome. Or people made a lot of money when the interest rate was high. So don't see interest rates going up. They've been way higher in the past than they're ever going to be probably in the future, and you could still make money. So high interest rates don't mean crash. Sorry to burst your bubble. There's no bubble to burst. The third and final one that I want to show you is the house value historical data. This goes back to the 1960s, and man, this one opened my eyes. Just take a step back and look at it in its entirety. That crazy crash that people love to keep referencing in 2008, does that look really that scary when you look back and look at the historical data? I know it was a crash. On average, house prices fell 20% over 2 years, so even that wasn't probably as bad as they make it out to be or as you have in your head. So taking a step back, yes, it goes up and down, but on average it goes up a lot. Now what I could see being concerning is how quickly it's gone up in the past 12, 18 months. So I don't think that's sustainable, but I also think that probably means some type of slight dip or some type of softening. It doesn't mean an arrow going downward. And even if the arrow does go downward, look at how quickly it went back up after it went down in 2008. It's a short-term issue. When you're investing in real estate and you're buying rental properties, however you're investing, it's a long-term gain. You're not trying to time the market. No one ever does that. If you try to time the market, you're going to probably fail. It's about time in the market. Every single 10-year period you break up in this chart, values go up. Even if you take it from 2008 to 2018, values go up over a 10-year period, and they always will. So just know that going into it, this is a long-term game, and look at the prices. They've gone up and down a lot, but overall they go way up. Bottom line is, a good deal is a good deal. People that bought good deals in 2006 still own them and are still in business. People that bought bad deals in 2006 and the crash happened in 2008, yeah, a lot of them are probably out of business or filed for bankruptcy. But good deals are good deals in any market, whether the market's flat, down, or up. A good deal with equity that cash flows will always be a good thing. I don't think you should wait to buy. I think you should buy now, and I think you should buy later. I think you should get buying as quickly as possible. You're never going to regret buying a property with equity that cash flows. That's always going to go up in value over a long period of time, or probably even a short period of time, and produce cash and start to create wealth for you. If that makes sense and you like a further back perspective of the real estate market, make sure to subscribe to this channel, hit the like button, hit the notification bell. I come out with this stuff all the time. If you want to see a real life example of a case study, HGTV style, before and after of a rental property that I bought without using any of my own money, check out this video over here. See you on the next one.